there's a lot of sellers out there that think that selling a house and selling a condo is the same. But one end of the spectrum, you have the high density building. The other end of the spectrum, you have a single family home. They're not the same. And Rick Dennis has definitely saved a few of my deals in the past because of some of these nuances involved. I could talk all day about what's different on the sales side about selling a penthouse that's on the market for 120 days on average, or versus a cookie cutter type of condo. But then today we're talking about loans, and thanks for joining us, Rick
Yeah,
Dennis.
yeah. Yeah, thanks. Good to be here with you, Edwin. Pretty cool.
Yeah, thank you. How's rates? That's what's on everyone's minds these days.
Always is, right? All the time. Well, good news is, after a 2 or 3 year period of rates escalating, we hit that mark now where rates are going down. And so that's great news. And so we've seen rates in the last, 4, 5, 6 weeks drop half to 3/4 of 1%. And so I think we'll see that. Now, here's the important thing to know about rates, and the media gets this wrong every time. So when you see on the news, hey, rates plummeted, rates just dropped, or people send you emails, you get these teaser mail notices, rates never just like drop. The good news is though, they are going down. But they go down incrementally. They go down slowly over time. So the good news is rates are going down, but just know that rates will not go down like a 0.5% overnight. They
Yeah,
don't
yeah,
move that. I wish they could go that fast, but they
yeah.
don't. The other important thing to know is when the Fed announces a rate cut, that is not directly tied to the mortgage rate. And so there's no relationship there whatsoever because the mortgage market's tied to the bond market, the 10-year Treasury security market, not to the Fed discount rate.
Yeah, minor detail that the news and everyone leaves out.
Yeah, right.
But what
But
are you seeing as far as like single family these days, as
oh
far as
yeah.
what the rate is?
Well, you know what happens though, Edwin,
September
is
27th as of this video right now.
oh yeah, for sure. So what happens, the markets anticipate the Fed movement weeks in advance. And so even though the Fed had not lowered the rate, the mortgage rates were going down incrementally over the 4 or 5 weeks up to the Fed announcement. So the Fed announcement to the mortgage market was like ho hum news. Now we're looking for the next announcement. We're always forward thinking on that. But I think the Fed will cut the discount probably 2 more times this year.
Yeah.
So we're going to start seeing some gradual rate reductions, and so the market's good.
What kind of rate could someone get on a single family home?
It depends on a lot of factors. Depends on FICO scores, loan limits, loan types. But generally speaking, Edwin, right around 6%,
Around
5.99, 5 7/8, 6.125. Right, real close to 6% either way.
Okay. And then for condo?
A little bit higher, on every condominium, and this is not a lender situation. This is governed by Freddie Mac and Fannie Mae. And so on a condo, when you have less than 25% cash down payment, and this is only for conventional financing, does not apply to FHA or VA. On those loans, if you're putting less than 25% down, Freddie and Fannie charge a 3/4 of a discount point price add to the cost of the loan. That normally equates to about a 1/4% higher rate on a condo versus a regular single family house.
Okay, so 1/4% higher on the rate, and then a little bit more as far as the cost goes when that's where your closing costs.
Right.
Okay.
It can be. It can be. Just normally it's
Yeah.
easier to pay the extra high, a little bit higher rate because the trade-off in the rate, Edwin, is maybe $50 a month, if that, versus a 3/4 point hit is probably $4 or $5,000.
Got
So
it. Got
it's
it.
just better to pay that little bit higher rate than it is to pay that 3/4 hit up front. I've seen that. That's
Okay,
exactly
cool.
right.
Yeah, so what I wanted to ask you, because of I,
Mhm.
I sold houses right around here,
Yep.
and here, so
Hmm.
that's where the rates were really up into even the sevens for a jumbo. So
Hmm. Hmm.
if someone bought over here or here, is it, in your opinion, time to would they benefit from refinancing today?
It's a great question. We got to be careful here because a lot of lenders are suddenly coming out of the woodwork. They're now leaving their day jobs, kind of, and then going back in the mortgage business, right? And
Yeah.
so you got to be careful with that. Yes, yes, someone can refinance depending upon the situation and the type of loan they have. Now, my general guidance right now, look, it's a game of being patient. The easy answer is let's refinance the house, save you 300, 400 a month on the payment, and then refinance later. That is that's usually the wrong answer because there's a cost associated with doing a refinance. It's not people say, oh yeah, it's a free refi. Well, it's not really free because they're adding that cost of that loan onto your loan balance.
Right.
They may not be any money out of pocket, but it's still a cost factor, escrow, title, and so on. If you can be patient long enough and ride this thing out for the next 4, 5, 6 months, we could see another 0.5% lower rate by first quarter of next year, and then you want to pull the trigger, because it
Gotcha.
doesn't make sense, Edwin, to keep refinancing the house. It's a churn and it's a churning situation. And for lenders that always want to give the advice, refinance now, you can always refinance later, that generally is not always the best guidance, but it depends on the loan and the situation they're in. But generally speaking, probably not. The only exception to that is if they have an FHA or VA, you can do what's called a streamline, and we normally include all the closing costs in the loan and the actual interest rate on that streamline without really adding much at all to the principal balance. So in
Got it.
that case,
Okay.
yes, that might be a possibility depending upon the scenario, but for the most part, just be patient.
Okay.
Patience.
Okay. Probably not because in order to offset the cost of it, unless it's streamlined. Yeah.
Right.
Okay.
For now. For
Cool.
now.
Yeah. Yeah. So now I have an answer for my clients who
Yeah.
bought
There you go.
those months.
Yeah.
Yeah. So then, like I talked about earlier, Rick was the one who had saved a few deals of mine, and actually I met him because he happened to be the only one who sold or closed on a loan in one of the condo buildings where there was litigation going on. We'll talk more about litigation, but
Yeah.
then a lot of people don't know the difference between the financing of a single family home and the nuances involved. There's an added layer for a condo. Rick, why don't you get into that? What's the difference?
Well, yeah, there's a lot going on there. We've dealt with a lot of these, as you know. We've had a lot of we didn't really well with these loans. Here's the thing: on a condominium, the Freddie Mac and Fannie Mae on a conventional, even FHA, they have to approve the association, they have to approve the HOA, and so there's a requirement for that. There's a lot that goes into that, as we know, but if a condominium had previous litigation, that can be a disqualifier. If the property hasn't got the newest thing now, there's not enough insurance coverage for the HOA.
Yeah.
And now they're not, now they're getting rejected, which is not really fair. We know the history behind that. We can talk about that too. But there's lots of reasons why a condo may be what's considered non-warrantable. And what non-warrantable means is this: every lender, when they deliver a loan to the market to Freddie Mac and Fannie Mae, they're going to warrant it. They're going to warrant that the condo or the association meets their guidelines. And if it does not meet the guidelines, it then is known as a non-warrantable. That's what that means. So
Right.
if a lender approves a loan and delivers it, and it does not meet the guidelines for Freddie or Fannie for that association, then Freddie and Fannie will kick that loan back and make that lender buy that loan back. They won't accept it.
Right. Right. Yeah.
So that's why they can't do them.
Yeah, and then there's a few things that would stop Fannie, Freddie, even FHA that from lending in a certain building, and then that's
Right.
sometimes you'll see all just like cash deals for the last 2, 3 years.
Right.
So high percentage of rentals, right?
Yep.
That could be a
I can
deal
do it.
breaker.
Yep.
One owner owning a bunch of units,
That will do it.
yeah, that's another one. And then we talked about litigation earlier. So all those things, homeowners, you don't have to be an expert at this. Just make sure that you go hire someone that knows these kinds of things with condos. Because I'll give you a great example is the same building that we're talking about. It's called the Domain in Anaheim.
We know it well.
Constructed back in 2014, 2015. Do you know what? All of those buildings, a lot of people get shocked. Oh, litigation means that building's falling down. Pretty much all those buildings, in my experience with elevators, 100% of them end up suing their builder for construction defects. So
Everyone, every
yeah,
time.
yeah. I used to think
100%.
I used to think in the beginning, oh, maybe it's just lawyers trying to get rich. But then when you really think about it, the HOA, who does it comprise of? Usually Susie Homemaker and a bunch of volunteers on the HOA board. And then meanwhile, you got the big bad builder, millions of dollars. They've got attorneys on their payroll, and they say, sorry, we won't do these we won't honor these warranty repairs. So that's where a lot of it came from. Not to say there isn't any of that headhunting going.
Yeah, well, yeah, and there's two sides to that, I suppose. When a home builder builds a condominium association project, they have a 10-year warranty on the property, and everybody knows that. And so let's face it, there's not a home builder in the country that will build a property that's 100% exactly perfect 100% of the time.
Right. Yeah.
So these lawyers know that they can always find some what they term as defects, and they can sue the builder, and the builder eventually settles and makes the repairs. It's a long process. And look, in some cases, it's legitimate. and they do repairs, but they're not a situation where the buildings are falling down, they're dilapidated, they're a mess. That's not the case at all. It's normally just cosmetic stuff. But the moment they file that defect litigation, that association becomes non-warrantable immediately. There's no exception to it.
Right, right. Unless you have someone tenacious as Rick, he could sometimes
Yeah, well,
yeah,
yeah. We've had a couple of those. We did really, yeah, well, you're right, Edwin. And that's a great point because you have to know the distinction between what classifies a lawsuit as warrantable versus non-warrantable. And there's a fine line there. And so you have to read between the lines of that litigation and what they're asking for. And if you know what that is, you can argue the case, well, this litigation does not fit the criteria to make it non-warrantable. And you can argue that case.
yeah.
You just have to know how to do it.
Yeah, yeah. And then for you homeowners who wonder if your condo cert is in good health, we'll talk about what a condo cert is.
Right.
What you could do, especially if you have a real estate agent like me that has sold several in the building,
Mhm.
what I could do is get in front of it because of now we could kind of anticipate what's going on. What the last thing you want to do as a seller is to shrink your market just to cash. Cash and people who's willing
Right.
to do the non-warrantable. But by the way, that non-warrantable, correct me if I'm wrong, it's simply a higher cost, higher rate loan because they're
Mhm.
they're
Mhm.
trying to offset the risk. So that
Mhm.
we're not going to talk about that because that's another video altogether. But then just
Yeah,
know
that is different.
non-warrantable is going
Yeah.
to cost more monthly. It's going to cost more upfront. So
Mhm.
if you're shrinking your buyer pool just to that, you're
Mhm.
likely not going to be able to get your full market value. So what Rick and I could do is we could get in front of it. And then what Rick's done in the past is we'll order what's called a condo questionnaire in advance, just to kind of get ahead of it. Remember,
Mhm. We
we've
do.
done that. There's a lot of nuances in that. And
Mhm.
then with that, of course, buyers, they're not obligated to use any lender. I can't force them to go use Rick.
Yeah.
And then also as a realtor as an ethics violation. But then at least we get to see that. And then when the lenders call, we get to tell them what's on that questionnaire. Some of
Mhm.
them will just be honest up front and say that they can't do it. And then Rick knows my frustration that there's too many lenders out there who will shine me off and then just think, oh, it's no problem. We've done so many of those before.
Right.
It's a red flag to me, actually. Someone who's not even
Yeah.
going to look at the questionnaire and just says, oh yeah,
Mhm.
we're really good. The borrower is well qualified.
Mhm.
Yeah.
Yeah, and that's a really good point because there's a certain skill set, as you and I both know. We've done so many of these over the years. We've helped a lot more families because we know the ins and outs of those, which is great. But here's the thing to know, and this is the argument I get all the time with sometimes with realtors that not like you, that you know what you're doing. Most you know how they go, and then with lenders, same thing. But I say, like for example, I had one a while back, different situation, different property. And I told the listing agent, I said, look, non-warrantable condo, here's the reasons why, but here's the important thing on non-warrantable condos. It is not, the answer is, oh yeah, but my buyer's got 20% down, they got high credit scores.
Right.
That's great news, but a non-warrantable condo is a property issue. Let's make the distinction here. It is a property issue, and it's not a buyer issue. And so it doesn't matter how much they have for a down payment or how well they're qualified. If it's non-warrantable, it's non-warrantable. And so we have to just be mindful of that. And we have to know how to approach that when we have offers. Because there's no amount, if the buyer has 50% down payment and makes $100,000 a month, they're still not going to get that loan through Freddie Mac and Fannie Mae.
Right, right. Yeah.
Yeah.
Yeah. And then Brick, explain briefly what happened after the Miami condo collapse.
Yeah.
Because the questionnaire you guys used to send out, I remember seeing those. It
Yeah.
used to be like one page, and
Yeah,
it's
I know, right?
probably like 5 questions on it. What's it look like now?
Well, yeah, it gives you a headache reading it actually. But like here's the history. It's important to know sometimes the reasons why things are the way they are. And let's look at that, like for example, in our market. It's a bigger picture, of course. But for example, when you have litigation, it used to be that when you had litigation, as long as it was settled, you had a letter that was settled and resolved, then it became warrantable. Well, they changed their criteria now to say that, well, even though there's two things here. Even though it is resolved, we want to be sure that repairs are completed. They've added that to it. The other thing of it is now the insurance. That's a big issue now because in the state of California, they're having a problem getting enough insurance fire insurance to cover the property. Now, previously, that was never an issue because you didn't have to have 100% coverage. What triggered the 100% coverage is that condo collapse in Miami about 3 years ago now, something like that. I forget.
Yeah, yeah,
Something like that.
2021 or 2020,
Yeah, somewhere 3, 4 years ago. That whole building collapsed because it was needed a lot of repairs. The building collapsed. Every unit was lost. And well, guess what? That association had insurance, but not enough insurance to cover the entire property. Well, then Fannie comes out and says, well, wait a minute now. What happens around the country? What if someone else, the whole property burns down? There's not enough coverage. Well, so they changed the policy. Now there's some movement to change that back because it's really, really unfair. That policy now makes the assumption that if there was a huge fire and the entire condo association, every building in the association burned to the ground, is there enough coverage to replace all the buildings? Well, the answer is no, because no insurance company will insure it to 100%.
But then the condo questionnaire that you're seeing on your screen right now, this has been a thorn on my side and in Rick's side because prior to that Miami condo collapse, they would send out the questionnaire and it says it's building in litigation, and they would just answer no. But now it's 10 pages, as you can see. And then if they answer any of these questions, and in fact, this condo cert company actually just put down C attached, and then the litigation was more than 2 years ago in this situation.
Yeah.
So then no longer are the days where homeowners could just breathe a sigh of relief. Oh, well, the litigation settled. We should be able to get any loan. No. I could think of 2 buildings off the top of my head. One of them just cleared litigation. The other one cleared litigation 3 years ago. So you can't get conventional, but then tell them about your secret weapon that most people overlook that actually most people can't do.
Yeah, it's actually really cool. We've done these as well, as you know. And look, there's loopholes. You have to know, look, the mortgage business is not like it's not like push button, get mortgage. If it was that easy, I mean, my job would be so easy, it'd be ridiculous. I love what I do, but you have to know what you're doing, right? And so people don't know that if an association is non-warrantable by Freddie or Fannie, that does not mean that FHA says it's non-warrantable. That does not say that VA says it's non-warrantable, right? So when we have those non-warrantable condos, we look at, okay, why is it non-warrantable? What's going on there? And will FHA accept it? Is it within their guidelines? And VA. Now, there are 2 separate websites for FHA and VA. They will tell you if they're already approved or not. For the most part, FHAs, we know, about 80–90% of those associations have expired. So they're no longer approved. Well, how do you get around that? Well, there's a little known way to do that called a FHA spot approval. Well, what does that mean? Well, that means instead of going in and approving all 200 units in the association, we're going to go in and package that loan just to approve that 1 unit, just for that 1 unit only. That's it.
Right. Yeah.
And most lenders don't do that. It takes a bit more work, more risk, and they haven't got the skill set for it either, but they don't want to be bothered with all the extra paperwork. It's a lot of work. And so most lenders won't do those. We do them, as you know, and I like doing them because it helps more people get houses. And so we've had cases where we have a non-warrantable condo. We've had people say, oh, you can't do that. You can't get that loan closed. And then we close it like 3 days.
Yeah. And then you're preaching to the choir because Rick actually saved one of my deals last year that couldn't go conventional. And then the buyer was happy with FHA. Actually,
that's a great loan.
It's a great loan. Yeah, and then just full disclaimer: not everyone could do it because I've been on the listing side, and when Rick pitched this idea to me last year, I said, you know what, the spot approvals, my experience with them, I didn't like it because it made the escrow take so long, and then you don't even know if it's going to get approved. So then Rick's timeline, we're well under 30 days from the time you get over.
Less than 30 days on that.
Yeah, I think that because the first lender failed, and then Rick had to get started. I think our total escrow was like 45 days after the last one kicked
something like that.
Yeah, that's definitely a secret weapon. Yeah, we could talk about condos all day, but then definitely take down Rick's number. I'm going to put it on the screen. The background over there.
See it there, 714-315-0373.
Yeah, your head's in the way, but
see there, there we go.
Yeah, but thanks a lot for doing this, Rick.
It's fun, man. I love it.
Yeah,
thanks for inviting me on.
Yeah, look forward to doing this and doing something else in our next show.
Yeah, there's a lot more we can cover. It's good stuff. We do it every day. I'm passionate about it like you are, and it's all good, man. So thanks.
Yeah,
Appreciate it.
thank you.